Hello and welcome. As we have already covered three domains of the internal audit practitioner, which is a pathway to the certified internal auditor designation. In this video, I am covering fourth domain, which is comprising of or having the weightage of 25% in the overall course, and which is having 6 objectives. And this is the biggest portion, if you can see, out of all the domains. So let's get off to a start and ask some interesting questions first, and we'll get the answers to those questions all along the line. We'll review this domain in detail. What is relevant, sufficient, and reliable information? What are the risk implications and relevant control of common business processes? Describe computerized audit tools and techniques, or we can call CATs. Identify appropriate analytical approaches and process mapping techniques. Identify appropriate sampling, for example, random, judgment, or discovery sampling, and statistical analysis techniques. So let's refresh ourselves with the overall IAP syllabus, how many objectives are there and what is the weightage of each domain. So internal audit attributes, the first domain having 5 objectives covering 20% of the course. Then nature of work, 4 objectives, 20%. Engagement planning, 5 objectives, 23%. Engagement communication having 6 objectives, which we are covering right now, and covering the 25% of the scope of the course. And engagement work, 3 objectives and 12% of the coverage for the course. Before we get off to a start, just a reminder that you have to go to my channel Audit Strategy, because I'll be referring to my videos and all along the line, the whole course I've been referring you to my videos which are previously already available on my channel Audit Strategy. So you can have awareness from that, the academic part of it, and in these videos I'll covering more the practical part of it with the examples based on my experiences. So the domain 4 is comprised of or covers the standard series 2300 on the engagement work, and these are the standards which I will be covering. Performing the engagement 2300, 2310 is identifying information, 2320 is on analysis and evaluation, 2330 which is documenting information, and 2340 is about engagement supervision. So to start with, first read the 6 objectives of this standard, of this domain 4, and then one by one we'll go through each and every objective and discuss in detail. Recognize the relevance, sufficiency, and reliability of evidence for work papers and documentation to support conclusions and engagement results. The second objective is recognize the risk implications and relevant control of common business processes. Number 3 is describe computerized audit tools and techniques. Number 4th objective is identify appropriate analytical approaches and process mapping techniques. Number 5th objective is identify appropriate sampling and statistical analysis techniques. And number 6 is differentiate common performance measures, for example, financial, operational, qualitative versus quantitative, productivity, quality, efficiency, effectiveness, and financial analysis like the horizontal and vertical analysis or ratios related to activity, profitability, liquidity, and leverage, etc. So from the first objective, let's understand the definition of what is the relevant information. The relevant information supports engagement observations and recommendations and is consistent with the objective for the engagement. For example, if you have a finding as a review of bank reconciliation that few unpresented checks were not included in the bank reconciliation. To substantiate your finding, you need list of unpresented checks unrecorded in the bank reconciliation. You have to link those checks from the bank ledger or the bank book that is the management records, and then you have to make sure that same were not found in the bank statement. You can take another example from the same bank reconciliation exercise is the example of the bank charges which are not recorded, which you will find in the bank statement. So you can highlight those charges with the date of recording and identify, and this record having the bank statement linking with that is the relevant information for the purpose of these types of findings. So now the second part is this sufficient. So what is the sufficient information? So let's understand the definition of it and then take an example of from the same scenario of the bank reconciliation. The sufficient information is factual, adequate and convincing so that a prudent, informed person would reach the same conclusions as the auditor. So for example, we'll use the same previous example and we were linking a list of unrecorded, unpresented checks to cross match with the list of unpresented checks in the bank reconciliation and non-availability of those in that list. So that would be a sufficient evidence to understand that a prudent, informed person would convince and reach to the same conclusion as the auditor. Because you are giving a sufficient type of information and linking the bank statement which is not created by you but came from the bank and from your in-house information. Third is reliable information. So the reliable information is the best attainable information through the use of appropriate engagement techniques. So third party evidence in this scenario, for example, the bank statement is more reliable than in-house documentation. So other third-party evidences can be like vendor's statement of balances or a court decision. So always if there is a comparison between what is more reliable and what is less reliable, just keep this in mind that the third-party evidence, particularly any regulator or court-related information or financial information from the bank will be considered more reliable than the information generated within the organization. So keep this in mind that with reference to the first objective, the relevance of the information, the sufficiency of the information and reliability of the information. If you keep this in mind when you are developing your working papers and providing the supporting evidence with that, and you just keep this in mind and make your conclusions based on these three definitions, your finding will be well supported, will be having enough evidence which will be convincing for the auditee or even for your manager or for your head of audit to understand that there is no more information or no further information is required to prove or justify or substantiate the findings or the conclusions we have reached to. So the second objective is to recognize the risk implication and the relevant controls of the common business processes. For example, HR, finance, procurement, production, sales, marketing, and other functions. So let's get the practical scenario of these, and we'll go one by one and review these. For example, HR. So HR is having some type of risk implication. For example, unsuitable hiring, or improper hiring, or high employee turnover, or leadership crisis risk. What are the relevant controls? For unsuitable hiring, you can have background checks, verify the previous employments, verify the educational background. For high employee turnover, there has to be employee retention policy, social benefits to the employees, loyalty rewards for long-term employee continuation, and for example, car buyback or special bonuses. For example, an employee is completing 5 years should deserve a special bonus, or if someone is completing 10 years, deserve a special bonus. Then we can say that leadership crisis risk. For example, you need to have succession policy or succession planning within the organization, plus trainings and developments to build and grow the resources within the organization so that they are ready to take on the senior level positions. Then procurement. The risk implications can be undisclosed conflict of interest, which can be mitigated by relevant controls, for example, conflict of interest policy, and defined verification processes. Unilateral contracts. Contract review process should be established, and relevant parties should review the contract and give their feedback before we are going to sign a contract. So it is legally, controls point of view, from the financial implications, is properly covered. Substandard material, for example, it is substandard material is delivered. So there has to be a contract, there has to be a service level agreement. We need to have a clause on retention money or maybe performance guarantees, so that we can cover our risk as an organization, and these risks are not exposed to us. Now we will see some risk of the production and the sales and marketing and the relevant controls of these. So for production, there can be equipment failures. So we need to have relevant controls of having a maintenance schedules for these equipment, and then we should be aware of that we are following those schedules and timelines which are given by the manufacturer for the maintenance of these equipments. Then chemical hazards, protective equipment, HR policies for employee support if they are doing some work in hazardous environment. Employee safety, so there has to be a fire and safety controls properly implemented, and also there has to be an awareness to the employees, so when they have to ring the bell and raise the alarm that there is some areas where my safety has been compromised. Then we go to sales and marketing. So there's a brand risk. Marketing policy is established in order to mitigate the brand risk. Brand strategy is established. The social media policy is very important in order to mitigate the company's reputational and brand risk. Then customer risk. There has to be customer satisfaction surveys and policies. There has to be CRM policy, after sales policy or warranties given to the customers. Then marketing risk. Policies based on market surveys, analysis and forecast and countermeasures. So now let's see what are the risk implications in the logistics and what are the relevant controls. For example, operational risk are there, like delays, damages, cargo theft. What is the relevant controls? The purchasing, planning, supply line details. Then we have regulatory, we can have regulatory fines and sanctions. So there has to be compliance reviews, contract terms should be reviewed properly. If they are covering you, the insurances are there. The nature of hiring is also very important. We are hiring a competent person who is having the aware of the regulatory environment in which he or she is operating. And the cybersecurity threats, more reliance on digital tools, exposes to cyber attacks and data breaches. The relevant controls can be control over digital platform being used, penetration testing, which can be split into external penetration testing and internal penetration testing. Then outsource process management. So there can be data breach. Outsourcing IT services can lead to data mismanagement or leakage, because you are giving third parties access to your company's data. So there has to be data security policy, the contract is properly reviewed. For example, you need to have a clause of auditing the environment in which third party is operating, and they are not hopefully exposing you to some risk of hacking. So that we need to go through that, perform that audit on a frequent basis and understand that we are not exposed to some risk, not because of our wrongdoings, but some other weak processes of our third parties or vendors we are operating with. So now let's have a review of third objective, which is about the CATs. This is about data mining, extraction, continuous monitoring, automated work papers, embedded audit modules. So CATs is computer assisted audit techniques, are a set of tools and techniques that use computers to automate audit processes. So CATs can include a diversity of tools. For example, data mining and extraction. CATs can help auditors search for irregularities in data. So this is something very helpful, that instead of going for sampling, you can even this automation can help you in analyzing the whole data. Then continuous monitoring, a process that involves collecting, analyzing, and reporting on business processes, business data to identify and respond to operational risk. For example, one important aspect of continuous monitoring is the exception reporting. So you're only reviewing the exceptions which are arriving, and maybe an embedded pop-up email is attached to that, so you are getting only the exceptions communicated. Then automated work papers. Auditors can create electronic work papers that are stored in a centralized database. This makes it easier to navigate through current and archived work papers. Data analysis reports. So auditors can use audit commands to create reports that filter records and join data files. So there can be different type of data you can generate. Analysis report, which normally management might not be using it, but these are useful for the auditor to understand and a gray area, and to probe into or go further into further detail, or take a deep dive in that area. Then analytical test. Auditors can use CATs to evaluate financial information by studying relationships between financial and non-financial data. So there are various audit management tools available in the market. So I'm giving here some examples. I'm not subscribing to anyone. I'm not suggesting you that you should use this or you should use that. This is up to you. You need to do an analysis, do your own study, a feasibility cost-wise and value-wise, and what is the requirement of your organization, and then get the best tool for your requirement. For example, SAP Audit Management is there, Audit File is there, Audit Board is a cloud-based software, then Matrix System is there, internal audit management platform that best suited for the chief audit executives in the large businesses. Then AB Lite is there, also is a good internal audit software which is available in the market, and there are many more. I'm just giving you a few examples. So the fourth objective is identify appropriate analytical approaches and different process mapping techniques, like the process identification, workflow analysis, process map generation and analysis, spaghetti maps, Raki diagrams, and many more. So the analytical approach is a process using data and arranging it in a certain way to understand a trend or a parameter or relation. For example, a trend of monthly sales or gross profit, ratio analysis to check current ratio or profitability or liquidity ratios. Process mapping techniques are systematic ways to analyze, document and improve business processes, for example, flow charts or data flow diagrams. Then RACI, which is responsible, accountable, consulted, informed chart, also known as responsibility assignment matrix, is generally used in project management to describe the roles and responsibilities of each person involved in a project. And a spaghetti diagram is also known as a spaghetti plot or spaghetti chart or a spaghetti model, is a visual tool that shows how people, product or information flow through a process. And the fifth objective is identify appropriate sampling techniques, for example, random sampling, discovery sampling, statistical sampling, and the statistical analysis techniques. So random sampling is a common technique where each data item has an equal chance of being selected. The systematic sampling is a systematic approach that may involve choosing every fifth person from a list, for example, or maybe you can have another way of, for example, all high value items or all items, all values above 5 million or above certain amount. Then convenience sampling is the researcher chooses the sample based on their preference and convenience. This is not maybe always the representative, but it is like easy to fetch and do some work. For example, you are doing a stock counting and what items are in front of you, you can easily go for them and count them. It can be called a convenience sampling, but it's not advisable in all the scenarios. Cluster sampling, the population is divided into groups or clusters and a random sample of clusters is selected. So this is when the data can be divided into different strata or different types, and then it's better to do your sampling on clusters rather than on the whole population. Snowball sampling, a qualitative technique where subjects are accessed through network connections, and then stratified random sampling. So it's random sampling method where the population is divided into groups or strata, and a random sample is taken within those groups. So now we know that this is something more linked with the cluster sampling, but here we are doing a random sampling on that type or that strata, while these are the bigger groups in the cluster sampling on which we are doing a sampling. The main point is that whenever you are doing a sampling, whether you are using a random sampling or a statistical sampling, these are the two mainly used sampling methods. You need to make sure that your data is or your sample is based on the population, is representative, and what you are trying to cover from this exercise, you will be able to get it after having a thorough review of your representative sample. Convenience sampling will definitely affect the whole exercise if it is merely based on convenience. However, when the controls are fine and you have a trust level, or your residual risk is not that high, you can consider convenience sampling in that, but it is again not advisable. Then the sixth objective is differentiate common performance measures: financial, operational, qualitative versus quantitative, productivity, quality, efficiency, effectiveness, and the financial analysis like horizontal or vertical analysis, and the ratios analysis, for example, to check the profitability, leverage, liquidity. So performance measures are the method of evaluation to assess how well a project, program, or process is doing to achieve its goals. It's a systematic way to evaluate and can be used to assess the efficiency, which is to assess the health of a process performance, the effectiveness, how well a process is achieving its desired goals, then quality, achievement of the quality of a good or service, then productivity, to assess productivity of a person or process, a cost, to assess a project's cost efficiency, quantitative, use the numerical data to provide an objective perspective, monthly invoicing versus cash collections, for example. Then qualitative are more subjective measures and rely on individual perceptions and judgments, for example, to measure customer satisfaction with the service. And the financial analysis, which is used to evaluate an organization's stability or liquidity, profitability, going concern, sustainability, financial strength in various ways. The purpose generally is that investment and the long-term growth is assessed and how well they are performing. A method generally used is ratio analysis, for example. So ratios are generally used by financial experts, investors, to measure an organization's strengths and vulnerabilities. Some examples of ratios are profitability ratio, for example, net income to revenue ratio, efficiency ratios, revenue to assets ratio, liquidity ratio, for example, current assets to current liabilities, and leverage ratios, for example, liabilities to assets ratio. So this concludes our domain 4 of the internal audit practitioner. If you want to connect with me, I'm giving my contact details. Drop me an email and approach me so I can support you and answer your queries. And wish you best of luck for your preparation. Please share my videos for all those who are pursuing the internal audit practitioner, and hopefully this effort will be useful for them as well, and also they can approach me for any type of guidance and support. So thank you so much.